Welcome back. You're still tuned into Midcap Radar, where Rategain Travel Tech is the next management on the show. The stock has surged nearly more than 150% this year. In fact, company recently hit $1 billion market capitalization as well. To discuss demand and business outlook, we have with us Bhanu Chopra, the Chairman and Managing Director of the company. Mr. Chopra, good afternoon. Thank you so much for joining us. Well, we are in the season where it's all about travel. It's all about higher prices as well and demand shooting up as well. What does it mean for you? We are seeing higher prices for tickets and hotel bookings. Does this convert into higher pricing for you as well? What is the trend looking like?
Yeah, so first of all, thanks for having me on the show. A very good afternoon to you and the audience. Things are looking very, very robust, as you actually saw in our quarterly earnings as well. We delivered almost an 88% growth quarter over quarter from last year, and we're seeing similar kinds of volume growth as well as, overall new contract wins as well. And if you look across all our three different business lines, DaaS, distribution, and MarTech, the demand is pretty robust. We are seeing, with the advent of AI and decision support systems requiring a lot of data, our DaaS business line is doing extremely well. We had a very large order book on our distribution business, which we were able to monetize this quarter in the current Q3 quarter. And something that I've said on our Adara business, the acquisition that we did, which is part of our MarTech business, we're seeing some significant go back to sort of pre-COVID revenue levels for Adara, which was almost close to 100 million. So yes, it's a holiday season and there is continues to be robust demand. I think people's attitudes towards travel has changed. If you actually look at the top spend for any consumer today, it's on discretionary spend, it's travel. And we're definitely beneficiaries of that trend.
Mr. Chopra, good afternoon. Thank you so much for joining in. Your first half, the organic growth for your company was around 35%, and you had mentioned earlier that the second half will be stronger than the first half. We are almost nearing the end of the December quarter. What is the organic growth run rate that you have seen this quarter? If you can share a number with us.
Yeah, as you know, I can't share those exact details with you. All I'll continue to maintain is that, as I stated in my previous commentary, that the business is looking very, very robust in terms of demand for newer products that we've been launching, also monetization of the order book that we've had. And I'll continue to re-emphasize that, our H2 is usually seasonally stronger than our H1. So we will continue to maintain the growth guidance that we talked about in our last quarterly earnings. So at the beginning of the year, we talked about an overall 55 to 58% growth for fiscal year 24. And we raised that in the last quarterly earnings call to 65%. So I feel very, very confident given what I'm seeing in terms of both pipeline conversion and monetization of our order book, that we should be able to surpass even the revised guidance that we gave.
Okay, you will be able to surpass the revised guidance of 65% as well. So that's interesting. I wanted to understand, you briefly mentioned MarTech as well in the first answer. How much is it as a percentage of revenues right now? I understand the gross margins here are around 55%. Is this something which would be a big growth driver for the company? What is the growth specifically expected in MarTech, distribution, and the DaaS segment?
Yeah, so as I mentioned to you, that all three business lines are showing some robust growth. On our distribution line, we had a very large order that we monetized. So you should see, an increased growth in our distribution business. Our MarTech business continues to grow at a healthy clip as well. And I can't talk about specific numbers, but like I said, all in all three business lines are doing exceedingly well and beating expectations. So consolidated basis, I'll continue to say that we should surpass that 65% number.
Right. Mr. Chopra, you recently raised 600 crore rupees through a QIP. How do you plan on utilizing those funds, and are there any acquisitions that are in the pipeline? If you can share an update on that.
Yeah, absolutely. So the purpose of doing the QIP was basically to build a war chest. So, prior to the QIP, we were sitting on about 450 crores. So now the balance sheet is very strong. We have about 1,050 crores on our balance sheet, which allows us to really get aggressive from an M&A perspective. And we run a programmatic M&A program where we look at companies that sort of fit our product vision of building an integrated tech stack that allows our customers to acquire guests, retain and engage them, and have a wallet share expansion. So all our acquisitions in the past have also been in sort of the Western Hemisphere. So we'll continue to look, in North America and Europe for some of these deals. And, given there has been, huge opportunities that we've seen in our pipeline, we have a very robust pipeline from an M&A perspective. It's just, as you know, we are very judicious on what we pay. So as far as, as long as we can get the right kind of deals, the money is really to help, with the M&A, because as you know, we are at now almost 1,000 crore run rate with a 20% margin. So the company is extremely cash generative, and the purpose of the money is really for M&A.
Right. All right, Mr. Chopra, many thanks for joining in. That was the management of Rategain Travel Technologies. The stock has had a fabulous year in 2023. It's up almost 150%. That's almost 2.5 times in 2023 itself. 716 rupees for Rategain. But with that, it's a wrap on this edition of Midcap Radar. From Sonal, myself and the entire team that put this show together, thank you so much for watching. MF Corner takes the action forward. Stay tuned. We'll be right back.